Australia's unemployment rate jumps as the labour market cools. China to resume buying Australian timber, and it's a big weekend for the leaders of the world's most industrialised nations, including Prime Minister Anthony Albanese. It's Friday, the 19th of May, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. Survived our birthday celebrations yesterday?
Yes. Yeah, gosh, it was a big day, wasn't it?
It was a great day. Yeah.
Yeah, third birthday, nearly 13 million downloads, a lot of celebrations happening. But you know what?
What, Michael?
There was no sleep in this morning. We just got straight up and just straight back into it.
A little too much birthday cake last night, though, I would say.
Birthday cake hangover?
Something like that.
Now, you've got an interview coming up after the show today, Sean, with Elise Balsillie, who is the head of Thrive Australia, a supporter of the podcast.
That's right. Thrive's a software company that helps businesses in everything from appointment bookings through to marketing campaigns, customer relationship managers. So they've got their finger on the pulse of the private business community. And that's very much what I talked to Elise about. Very, very interesting.
Yeah, it's coming up a little bit later on that chat. But the main story this morning, Sean, the labour market in Australia is cooling, with the unemployment rate last month jumping to 3.7% after 4,000 jobs were shed from the economy.
The result was unexpected. Most economists were forecasting a jump in employment of about 20 or 25,000, and it does suggest that the strength in the labour market might have peaked. In terms of numbers, the unemployment rate rose from 3.5% in March to 3.7% last month. The number of people in the workforce, the participation rate, fell slightly, though it still remains historically high. The aggregate number of hours worked rose, and the unemployment rate plus the underemployment, so that's people who want to work more, put those two together, it's still pretty low. The unemployment rose to 3.7% back in January, but then the Bureau of Statistics said it was probably just a temporary rise in the rate because many unemployed people had a job to go to. There was all sorts of seasonality issues then. There was no such explanation from the Bureau yesterday. Treasurer Jim Chalmers said the increase in the unemployment rate reflected higher interest rates and global uncertainty.
So is this just the beginning then, Sean? Are we likely to see the unemployment rate rising for the rest of the year?
Probably, or at least the trend will be upwards over the next 6 months, 12 months, even longer. Forward indicators, things like job ads, vacancy rates, hiring intention surveys, they all indicate a slowdown in the employment market. Yesterday's figures also adds to the argument that Australia isn't about to embark on a wage price spiral, which of course would be bad for inflation if we were going to do that. Earlier this week, we saw a measure of wages, the wage price index, come in at a solid rate, a decent rate, but not a worrying rate. If you transfer all that to what it means for interest rates, then a rising unemployment rate sits in the category of no more rate rises. In fact, the Reserve Bank's charter says it needs to target price stability and full employment. Now, Governor Philip Lowe has made it pretty clear that price stability is the number one priority, but, the central bank still has to look after employment as well.
I don't know, Sean. I feel like today is the first day that I feel some sympathy for the Reserve Bank board and just how many different factors that they need to kind of weigh up that go into every decision in terms of inflation and unemployment and wages and just all of these bits and pieces that all have to go in and trying to strike the balance.
Yeah, it's not an exact science, economics. In fact, they call it the dismal science because there's always sort of a dark cloud to the silver lining sort of thing. Yeah, so it's a hard job, no doubt about it.
Yeah, sure is. Now, local markets, how did they perform yesterday?
Well, Michael, the S&P ASX 200 closed up 0.5% to 7,237 points. Tech stocks were the stars, while materials companies also did well. Real estate and healthcare stocks were the underperformers. All three big miners, BHP, Fortescue and Rio, rose by more than 1%, as did Santos, the oil and gas group, and the diversified miner South32, it was up more than 1% as well. The banks were generally higher, while some of the more defensive large caps, Woolies, CSL, Toll Road Group, Transurban, Telstra, they underperformed.
Defensive large caps. Quick kind of jargon explainer there, Sean.
They're better when the economy is slowing, defensive stocks. Now, what you're seeing, what you have seen over the past 24 hours, is that people are a little bit more confidence in the economy. As a result, they're going to the non-defensive stocks. And some of the defensive ones, the ones that you probably want to hold in more difficult times, they didn't do so well.
I do enjoy putting you on the spot there. Anytime little bits of jargon pop up, even though you've explained them to me many times in the past, I just like to keep you on your toes. And every time you deliver.
I'm not so sure about that.
No, you do. In international markets, Sean, what's happening?
It's really been quite a fairly quiet week for commodities, and that's continued over the past 24 hours or so. The debt ceiling debate in the US has dominated equities and fixed income markets. The latest on that is that President Joe Biden is confident a deal can be reached before the end of the month, thus preventing the US from defaulting on its debt. The Aussie dollar's been trading around 66.5 US cents all week. That's where it is this morning. And of course, Michael, though we can't finish the week without picking out a fun commodity. So far this week, we've had coffee beans, lumber, soybeans, beef today.
What have you got, Sean? Because I've got my fingers crossed that it's one of two things.
You're probably going to pick it because you've been talking about this commodity for a long time. It's time to talk about orange juice.
Orange juice, yes.
Yes.
Go for it.
So orange juice prices hit a record earlier this year, back in February, March. The crazy level of more than $280 per 100 pounds. What's that mean? I don't really know. But anyway, highest ever back in February, March. Now they've come off a bit, but they are still very high. The orange market, at least in the US, is dominated by Florida. That's the biggest orange growing state. Alas, last year's harvest was poor, and that really pushed up prices. So things are turning around a bit. Hurricane Ian down there didn't help either. What I did find out, though, which I found more interesting than the price, is that Brazil is the largest exporter of oranges. China produces the most tangerines and mandarins and grapefruits. And Mexico is biggest when it comes to lemons and limes. There you go.
Sean, I'm almost overwhelmed by the number of random facts that you have stuffed into my head this week. I just find it remarkable that orange juice is considered a commodity, that it's not oranges, it is in fact orange juice because of the juicing and the freezing process and all of that, and that you can then measure it by the pound as opposed to by the litre or the gallon.
Yeah, I know. It's pretty fascinating. Commodity markets, particularly those sorts of soft commodities, are really, really interesting, but you never really hear much about them.
No. Well, this week we've heard arguably too much about them.
Possibly.
There's plenty of other stories going on. We'll be back in a moment with the rest of the day's business news. Sean, China will immediately resume imports of Australian timber, which is a very positive sign in the thawing of relations between Beijing and Canberra.
China's ambassador to Australia, Xiao Chen, said the $1.6 billion annual trade will be resumed after importers met a series of conditions from Chinese customs authorities. Trade Minister Don Farrell, who last week visited Beijing, welcomed the announcement, saying it was a great outcome for the Australian forestry sector. He added that he looked forward to the full resumption of trade for all affected products as soon as possible. During COVID, China imposed bans or prohibitive tariffs on about $20 billion worth of Australian imports, including barley, seafood, cotton and metals. Xiao also said both countries are working on a meeting between Prime Minister Anthony Albanese and President Xi Jinping in China later in the year. He said Australia's military build-up under the AUKUS Pact and the recently released Defence Strategic Review was absolutely unnecessary because China posed no threat to Australia.
Staying in politics, Sean, former Coalition Minister Stuart Robert has formally resigned from Parliament a day after criticism from Prime Minister Anthony Albanese over his decision to miss budget week sittings in Canberra.
Robert has been the federal member for Fadden on the Gold Coast since 2007. He's a former Employment and Government Services Minister in the Morrison government. He said he's stepping down to focus on his family. Now, Albanese said on Wednesday it was completely unacceptable that Robert was not present in Parliament last week. Fadden is a very safe Liberal seat. There's about a 10.6% margin. The Labor Party aren't even sure if they're going to run a candidate as yet.
Sean, software accounting group Xero's share price jumped 9% yesterday, even though the group announced a $106 million loss.
Yeah, so it had to write down the value of a couple of its platforms, something called Planday, it's a time-tracking rostering payroll system, and something called Waddle, Waddle. It's basically tracking borrowing against invoices. Those two platforms haven't done so well. Had to write them down. That hurt the bottom line. But Investors like the fact that there was a 28% jump in revenue and the very, very low churn rate, even lower than pre-COVID. If you exclude the write-downs, pre-tax earnings were about 45% higher. Now, the group's cut 800 jobs this year, and yesterday, Chief Executive Singh Cassidy flagged a review of Xero's execution and strategy in North America. It now has 3.74 million subscribers. Pretty good. About half those, or 56% of those, are in Australia and New Zealand. Xero's share price finished above $100 yesterday, first time in more than a year, at $102.49.
Wow, some slightly happier shareholders there, Sean. Now, another strong performer on the market yesterday was agribusiness Nufarm, with its share price jumping 14% after the company recommitted to its earnings forecast.
That's what they call a relief rally, Michael. That's when investors are relieved that a company they thought was in for a tough time because of what some of its peers and competitors have said comes out and says they're okay. Nufarm yesterday announced a 51% jump in net profit. Chief Executive Greg Hunt said its seeds business is a star performer as customers stepped up buying new varieties of canola, sorghum and sunflowers. Oh, there's some commodities we can keep an eye on, surely.
Oh gosh, we've started something here, haven't we?
Yeah. Actually, Nufarm also, they have this seed technology business. And yesterday, Greg Hunt, the CEO, was talking about the fact that that's likely to deliver really strong long-term growth because it's taking advantage of the mega trend in agriculture of growing more sustainable food. That's kind of cool. And Nufarm's also benefiting from this whole shift into biofuels by aviation companies, heavy industry. So Nufarm is developing its biofuels business as well. Very fascinating little company, that one.
Quite kind of progressive, I suppose you'd say.
Yes, I think so.
Oh, interesting one. Now, gaming machine maker Aristocrat Leisure has announced a 27% jump in its half-year profit on the back of strength in its US business.
The group, which earlier this week announced a $1.8 billion bid to buy US lottery group Neo Games, also upped its dividend for the 6 months to the end of March. But, Michael, investors weren't particularly impressed and Aristocrat's share price closed down 3%. The weak spots are a drop in income from mobile gaming, very significant in that industry, and a soft performance in Australia. But in the US, revenue was up sharply, helped by the performance of Dragon Link, Buffalo Link, and Jackpot Carnival. Do you know what they are?
I have no idea.
No, I didn't have any idea. I had to Google it. They're actually names of poker machines. And the funny thing is, when I went to the Aristocrat's website, Dragon Link, for example, I saw the picture of Dragon Link, and I reckon any RSL club I've ever been into, you can see the pokies.
Yes.
That Dragon Link in it.
I have seen that.
Yeah. I don't use poker machines, but I just knew the picture immediately.
Oh, there you go. That's a bit of an eye-opener, Sean.
It is. Dragon Link, Buffalo Link and Jackpot Carnival, all doing well. Chief Executive of Aristocrat Leisure, Trevor Croker, said the result proved that diversification of assets was working for the business amid challenging market conditions, particularly in some of the previously strong performing categories.
Now, this is an interesting one. The clamour around carbon capture and storage is getting louder. Do you like that one? The clamour is getting a bit louder?
Oh, I like it. Yeah.
It's very just colourful language today. That's Friday talk. That's what that is.
Oh, I like it.
Now, yesterday, we had Santos Chief Executive Kevin Gallagher saying Australia could be a carbon capture superpower. I like the sound of that.
Yeah. Now, already this week, we've had Resources Minister Madeleine King talking about carbon capture and storage. We've had Northern Territory Chief Minister Natasha Files proposing a massive CCS, that's the acronym everyone's using nowadays, carbon capture and storage, CCS facility in the Territory. Now, the boss of the country's second largest oil and gas company has had his say. Gallagher reckons Australia can take emissions from gas production and heavy industries as a world leader in carbon management services. He said the Moomba carbon capture and storage project being developed in South Australia could be a game changer for the future of gas, both in Australia and Asia. He said the Cooper Basin could store up, so Moomba's in the Cooper Basin, which is mostly South Australia, could store up to 20 million tonnes of carbon a year for the next 50 years. So that's 20 times 50 is 1 billion tonnes of carbon. Isn't it amazing?
I'm going to admit something here, Sean, and I know this is kind of risky, but I really don't understand how the carbon capture. I understand the carbon capture, the storage part of it.
Yeah, they inject it into the earth, literally.
And it just sits there and breaks down.
Yeah. Well, I don't know that it breaks down. That's a good question. But there's lots of seams. So when they're extracting stuff from the earth, it leaves gaps in the earth. It sort of leaves seams. And so they're actually pushing the carbon back into those seams.
You know, it has all the makings of a good Fear and Greed daily interview, don't you think?
I think so.
Someone who could explain how it all works.
Yeah, definitely.
So this is just descending into a brainstorming meeting for
we'll
future episodes. But before we move on from that sector, Sean, the Victorian government has set some ambitious emissions reductions targets, hoping to cut greenhouse gases by at least 75% over the next 12 years. That is significant.
Sure is. The Victorian government's expert panel on emission reductions has recommended natural gas be largely phased out and the sale of emitting road vehicles also end by 2035. It came after Daniel Andrews' Labor government set a very ambitious target to cut the state's emissions by 75 to 80% by 2035 and commit to 95% renewable energy generation by 2035. Net zero emissions by 2045. Yesterday, Andrews said gas has a limited future in Australia and that anyone who believes it will play a key role in the country's energy transition is simply wrong.
Wow, ending the sale of emitting road vehicles in just over a decade.
Yeah.
That's
pretty amazing.
Optimistic.
Yeah, very optimistic.
Yeah, a lot of infrastructure work needs to happen before that. Now, international news. Sean, a big weekend for geopolitics. We've got leaders of some of the world's most advanced economies gathering in the Japanese city of Hiroshima from today.
There's plenty to talk about. The global economic outlook remains problematic. Both inflation and the cost of living pressures are hurting. Russian President Vladimir Putin continues his war in the Ukraine. Post-pandemic China is expanding its economic and strategic clout. There's squabbles between allies. Who's helping Russia? Who isn't? That remains contentious. Plenty to talk about. The group of 7 countries, the US, Japan, Germany, France, the UK, Italy and Canada, will also be joined by invited guests, including Australian Prime Minister Anthony Albanese and the leaders of Vietnam, India and Brazil. It'll be great to watch.
Yeah, sure will be. Now, the US state of Montana is banning TikTok over national security concerns, setting up a potential legal fight over freedom of speech.
It's the first state to totally ban the app, and the governor of Montana signed a bill prohibiting downloads of TikTok, which kicks in from the beginning of next year. It prohibits app stores from allowing downloads of the app. If they don't comply, TikTok and the app stores, Apple, Google, could face fines of $10,000 per violation per day. That's according to the new law. TikTok's response was that the bill infringes the US Constitution. It's really fascinating, this one. The app is owned by Chinese company ByteDance. There's been growing concerns about the company's ties to Beijing. It's really become a flashpoint in the deteriorating relationship between Washington and Beijing. Just be interested. I mean, this new law is headed to the courts, no doubt about it.
Yeah, certainly. Finally, Sean, I know we've had plenty of Elon Musk this week, but you got to say, he just keeps giving, doesn't he? He is now. Sorry, I laugh because he just creates headlines every time he says anything. He's now calling out people who work from home, saying it's an insult to those who have to show up in the workplace.
The Tesla chief executive said that firing up the laptop from home lowered productivity and also sent the wrong signal to factory workers and other employees who didn't have that option. In an interview with CNBC, and it's best just to put it in Elon's words, he said, people building the cars, servicing the cars, building houses, fixing houses, making the food, making all the things that people consume. It's messed up to assume that, yes, they have to go to work, but you don't. It's not just a productivity thing. I think it's morally wrong. He went on, people should get off their goddamn moral high horse with this bullshit because they're asking everyone else to not work from home while they do. It's wrong. And to finish, the laptop class is living in La La Land.
Wow.
Mm-hmm.
God, he didn't miss, did he?
No, he didn't. He's very good at that.
Yeah, certainly is. All right. Well, from there, from Elon Musk to the Fear and Greed Daily interview with Elise Balsillie, the head of Thrive Australia.
Much more rational conversation with
I think so, yes.
Elise, and a great look at what's happening in the small business and private sector communities.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And of course, Thrive Australia is a fantastic supporter of Fear and Greed. Sean, we have heaps of Mia nominations coming in, the most enthusiastic advocate of Fear and Greed. And if you want to be mentioned as our Mia and receive what is really just an honorary title, isn't it? There's not much kind of...
Might get a mug eventually.
Oh, yeah, one day. God, we'll have a backlog of mugs to send out. Yeah. If you want to be the Mia, the most enthusiastic advocate, then please get in touch. Send us an email through fearandgreed.com.au or join us on one of our many social media platforms that you will find Fear and Greed. Thank you very much, Sean.
Thank you, Michael.
It's Friday, the 19th of May, 2023. Make sure you're following the podcast and join us, as I mentioned, online on LinkedIn, Instagram, Twitter, and Facebook. And stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. And you can grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.